Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call Express. So world markets as well as our futures are higher this morning, reacting positively to the news that Larry Summers has pulled out of the race to be the next head of the Federal Reserve, paving the way for the more dovish Janet Yellen. So, Scott, do you think this is what's going to put us back above 2013 highs?
Well, I think there's been a mixture of things that have been supporting this rally in September. One, tensions in Syria going down, and then now this is actually more of a surprise. But what's not surprising is the constructive nature of this trend. We've talked about the trend. We've gone over the chart of the SPX so many times. You look right here at this chart, you will see, this trend that's been intact since November, got tested here in June, tested here again in late August. But if you look here, this trend line held. And then if you take a closer look, you will see that, you had a few spots for adjustments. We reclaimed this lower pivot, 1641. Here is when we took back the 50-day moving average, which is another spot for adjustments. And then look how we digested last week. Okay, digested a big move, shows commitment. Now all of a sudden, we're going to be opening up near these highs. So I wouldn't be chasing this, but hopefully you're not caught short, and hopefully you have some long exposure, because there's been a lot of signs saying to have some risk on. Maybe not be all in, but be in the game, which is what we've been trying to advocate here.
Right. There were many sectors that were giving us clues that we would go higher, and the prime example of that is the Biotechs, which has been the best performing group.
Right, and as stock pickers or traders, we like to find relative strength. If you look at the IBB, you'll see this group already at 2013 highs. It broke above this, well before, the S&P, and lots of stocks in that group have been great ones to trade.
And technology as well at 2013 highs before the S&P.
Right, and you always want to see tech lead, and if tech is leading, that has to get some kind of short off the brain. You look here at the Qs, you will see that, here was the summer highs, and we went through it well before the spiders of the S&P, which is not there yet. And then not only did we go through the high here, we digested above it with a flag type pattern. Yes, we would have liked it to intraday breakout, but overall, healthy action, and hopefully you have some technology exposure.
Right, and the financials may not have gotten back to 2013 highs, but they are picking up some lost momentum and helping us get back on track.
Yes, at least not a headwind last week. They actually, made a little, or did a little catch up. And if you look here at the XLF, you will see that this too, after breaking below this trend line, it popped back above it, flagging, reclaim the moving averages, and not near 2013 highs and leading the way, but doesn't always have to.
Well, speaking of the financials, it seems like you like the new setup in Goldman Sachs after Morgan Stanley just hit new to 2013 highs.
Yes, I think with the addition to the Dow, with the Twitter, IPO, them being the lead, you look here at the chart looks good. We're trying to find setups. You had a nice gap up, so, we talked about getting involved in some here and then some through new highs. Seems like that might be tested today. Morgan Stanley actually already above the highs, on the way, making its move, and who knows, maybe Bank of America closes above 1470 to join the situation.
And there are laggards playing some catch up. I know you're looking for a potential bounce back in Exxon.
Yeah, this one, I just thought some of the mega caps have been acting better, and this is that lower level. So we've been trying it. It's been a little iffy, but if you look here, you'll see that Exxon, after holding, really big support, it wound up building this lower pivot. So, we sent out a chart saying maybe you want to buy a little bit, and if it crosses above 88.90, perhaps you could see a move back to the moving averages, which is just a setup. We look for setups. You have a lot of stocks that have been great, that have been following the 8 and 21 day, that are on our go-to list. If you come back to us, we've talked about Netflix on the move, the nice little push that we just saw in Google, Amazon. The semis have been acting better. So, there are stocks that are trending higher you want to be involved in, and some playing catch-up, like we've seen with this move in oil, and some of those oil names, and hopefully XOM follows suit.
And we've, of course, talked a lot about your 2013 theme of going long the TBTs. Now, as rates have pulled off a little bit, is that providing us opportunity? Does that theme remain intact?
I think so, and I think this is an opportunity for people who don't have any exposure to something with rates rising exposure. Buy the TBTs. You look at the chart here, and you will see that this has been a really nice move, for the majority of the year, depending on how you navigated it. Now it's going to be opening around the 50-day moving average. If you don't have any kind of insurance against your bond, so to speak, or something that can make you money with rates rising, I think that nibbling at the 50-day, and hopefully it holds like it did here, and if it doesn't and heads back down to bigger support, I think this area is a better buy than a sell for the long term, as I do think rates will continue to rise after this pause on the summer news.
And what about gold? We did see it close strong on Friday, but it's not gapping up today. So
I looked to see how big it would be up. considering, you know, with the news we saw.
Right.
You know, and if you look at it, you know, it's just, I guess, that week. You look at the trends here. We've talked about, you know, lots of different ways to make adjustments, selling it here at this little trend line, selling it here at the macro move to the downside, and then bounced off it, and then you had a little bit of a reversal bar on Friday, so some people might have gotten a little long, and I would just say trade it versus the low here, 126.21. If it doesn't, you know, hold that, just get out of the way as this fresh little intermediate trend line broke to the downside.
Well, we'll be talking about all of this and more in the full morning call, so stay with us.